Hi, Karen Deis here, publisher of Mortgage Currency Magazine, and this is your May 2013 edition for loan officers, processors, underwriters, company owners, and branch managers. Now, the Consumer Finance Protection Bureau has been totally busy continuing to pump out information, manuals, charts, and documents clarifying what Dodd-Frank really means when the original rules were written. And I think that's going to continue on and on, even past the January 2014 date. So with that being said, we got the okay from a well-respected law firm to share a cool chart with the 6 different types of transactions covered by CFPB, along with the government regulations that applies to each loan. Next, if your company is considered what they call a small entity, they have created a series of compliance guides for small entity mortgage companies, and we've included them all in the article so you can download them. And if you're a loan officer listening to this, please let your branch manager or company owner know that these new guides are available. As part of the Consumer Finance Protection Bureau mini-series, we're up to Part 4. You'll find the loan officer compensation rule record-keeping requirements, and for QM, you're going to find the max DTIs and the loans that they'll take that are eligible for sale. And one more thing, if you have any high-priced mortgages in your pipeline, I don't know if many people do or not, as of June 1st, they're going to require that an escrow account be set up for at least a 5-year time period. So if you have a high-priced mortgage, you've told your clients that they don't have an escrow account, you've got 2 weeks to either close the loan or let them know that they're going to have an escrow account for taxes and insurance for at least a 5-year time period. And there are a couple of exceptions with that. If you originate USDA loans, there's some huge changes there as well, and this already went into effect on May 1st. They're trying to standardize everything across the board to make sure that all the regional offices are on the same page and nothing is left to interpretation. So in effect, what they have done is they've taken certain underwriting rules when it comes to income and assets that were open for interpretation, and they clarified it. And in this article, we broke it down for you exactly what they said and exactly what it means. Now, one of the updates that I'd like to mention is that you'll need to consider all of the assets held by family members. So let's say you have a couple buying a home, they qualify for rural housing, and their mother-in-law is going to be moving in with them. Mother-in-law has a savings account, draws interest on the savings account, which may put them over the income limit, because we're talking about entire income from the total household. Well, that has to be taken into consideration, and to cover your back, one of our experts, David Hale, has created an exclusive form for you called Household Member Disclosure, where you're listing everybody who's going to be living in the household, the assets, any interest, and it also has a fraud disclaimer included with that. So download that, take it to your compliance department, because I know it'll cover your know what. So the bottom line is that if you have USDA loans in process or pre-called people under USDA, you may want to go back and look at those files again and make sure that the income and the assets qualify with the files you're working with. Oh, and there's another USDA article out there, and we've created a mortgage talking points called What You Need to Know for USDA Loans and Compensating Factors. Great information for your clients and your real estate agents. Now, I'm sure you already know that Fannie and Freddie have extended HARP until December 31st, 2015. And in last month's issue, you'll find a link where Fannie and Freddie have posted marketing materials and letters that you can use to solicit customers. Oh, and you're also going to find a mortgage talking points that have been updated for you to send to your past clients. Now, speaking of Freddie, Freddie's going to be updating LP on June 23rd. And what's happening there is they have all new feedback messages that are going to be very, very specific as to why you got the feedback and what you need to do to correct it. When you read this article, you're going to find a link to the 12-page feedback message form. You may want to print that and review that as well. And here's where to come back to bite you. Let's say you ran LP and you got these certain feedback messages, and now you have to run it again after June 23rd. You may get different feedback messages and may have a problem with the loan. So as a subscriber, we'll notify you about 10 days before that rule goes into effect, so you can check your files that are going to Freddie and have been approved by LP. So just to recap a couple things, you're going to find 2 mortgage talking point flyers, 5 charts and checklists that you can download and share with everybody in your staff. And if you're into social media, keeping your clients and your real estate agents up to date, you're going to find 3 Facebook posts and 4 automatic tweets that all you have to do is press the little button and it's automatically posted to your Twitter feed. So again, Karen Deis, thanks so much for viewing this video, and remember that getting a loan approved and closed these days is rocket science.